Coming up in today's video, we're talking about the condo market update. The numbers are out, November stats. Let's deep dive into it. Coming up next. All right, Michael Jacobs here, guys. Welcome to the channel. If you're new to the channel, make sure you subscribe, hit that bell for more great content on the Toronto market. Today we're diving into the condo market for those who have been following it. It's been, pretty much on fire. Now, today we're going to be talking about just the sales of the 416 versus the 905, and obviously the whole general market or what's happening there. And basically moving forward, what to expect for the next year. We're going to do a forecast video in the next couple weeks here as we are end of the year right now. But today, like I said, just going over the numbers overall. Hopefully you see, allows you to build your plan of action if you're watching the market for that reason, or again, if you're just watching for the sake of watching. But make sure you subscribe, hit that bell for more notifications of videos like this. And feel free to comment your opinion. All right, jumping into it, the sales for November in the 416 hit, total sales were 1370, in the 905, 521, with average prices hitting in the 416 just over 596,000. In the 905, you had 454,000. Now, these numbers are getting, pretty high as we are seeing an increase year over year at 7% in the 416, in the 905 at 9.5%. When we look at these numbers, I feel like, we're getting up to the point that, with next year coming in the works of 3 more interest rate increases, we're probably going to see not necessarily a pullback on these numbers, but a flat line for the next 12 months. I don't see these numbers going quite higher, maybe in the 905 as 454, still some room there to grow. And as more and more developers keep pushing further out, as there's not much land they could do in Toronto's market, you're going to see those numbers jump up. Like I said, you got Vaughan, which is for the next 10 years supposed to be booming with construction. Hopefully those projects don't get kiboshed as they have been, but like I said, moving forward, I really feel that these numbers are going to flatline, especially if interest rates do hit an increase 3 more times, which were the projected for next year. Now, on a year-over-year basis, the sales are down 14.2% in the 416 and 13.5% in the 905. When we look at sales for the last few years, November, that was the highlight as the whole general market update, where we had sales on a 6-year low for November. Now, the condo market's been done tremendous well since the peak of the market, as more and more buyers have jumped into the condo market due to affordability and maybe the fear of missing out, not being able to obtain some property. So for that reason, the sales have been doing quite well for the condo market, but compared to last year on a year-over-year basis, down 14.2%, down 13.5% in the 905. This is a downward trend. It's not a 6-year low, but it's a 3-year low, and it's on a downward trend. Like I said, it could be next year that this still hits very similar to this November. Again, it might be even lower depending if we do hit that high third interest rate. Now, when talking with developers, they're saying that 2019 is obviously a year where they're going to try to maintain and just keep selling. They feel that the market is going to be very flatline for the next little while due to the economy where we're at, as well as these interest hikes that are coming up. Now, they're dealing with a lot of red flags, a lot of hurdles that they need to get through to obviously get projects off the ground and into construction mode. With the cost of construction going up, they see, seeing inflation up 10%, which, like I said, they've never seen that, which is causing on their side, a lot of these projects canceled. As when we bring up the cancellations for this year, we hit, there was over 12 projects that hit close to or over 4,500 units. Now, compared to last year, this is a trend that they're saying is going to continue due to the fact that cost of construction, inflation, like I said, is up 10%, which is, never seen before. But compared to 2017, you only had, 1678 units, which is very high compared to the following year, which you only had 379. Now, when you're looking at those specific units for this year, a lot of fishy stuff. Like I said, I reported on some of them and involved with some of these projects. And like I said, it's not, I wouldn't label all these projects being kibosh for the only reason of construction costs. But having said that, like I said, do I feel that there is some merit to that comment? For sure. Like I said, it's just where we're at. No way around it. To recap the overall condo market in the GTA, you had total sales $1,891 for the month of November. The average price is just over $556,000, and months of inventory sitting at 1.7. So again, months of inventory extremely low, and that's why you're seeing prices still increase. And although sales are not there as and they're kind of trending down, buyers that are in the market still, depending on your price range where you're looking, very, very competitive. And it's not as simple as just sitting back and waiting for the market to fill up with these inventory, because we're not seeing it. So anyone, like I said, I like to see that months of inventory on the buying side closer to 3 months. It allows buyers to kind of shop around and not just jump on everything right away, because you do miss out when you're looking at 1.7 months of inventory. Very competitive still. Hopefully that increases, but I do not see that right now due to the fact that, like I said, inventory is just not there. There you have it, guys. Like, comment, share. Hope you got some value out of this video. If you did, hit that like button. Love to hear your comments on this, and we'll catch you on the next one, guys. Happy holidays.